Hey insiders, Alex here. So in this masterclass, I'm going to share with you how to do data analysis on VIX using AI. AI in this example, I'll be using ChatGPT. Okay, so you can see, okay, from last night, okay, that the VIX actually spike up. Okay, so as I'm doing this video, okay, this video is going to be timeless. So even after this thing has happened in the future, you watch it, okay, it is still be useful as well. So as I'm doing this video, the time now it is 11:49 a.m. on the 6th of August 2024. Okay, the prior day, the Nikkei Japan 225 index, okay, dropped about, I think it dropped about 12%, previous day, the US indices, okay, Nasdaq, S&P dropped about, I think about 3%. Yeah, dropped about 3% plus, okay. The Nasdaq dropped about 3%, S&P dropped 3%, the Dow Jones also dropped 2.6%, okay. So you can see that the VIX spiked up. So for those who don't know what is VIX, VIX commonly is also known as the fear index, the fear gauge, okay. To be very specific, right, VIX, okay, you can just Google what is VIX, okay, what is VIX. VIX is actually, okay, from the so-called the volatility index, okay, it is actually the market expectation of a 30-day volatility. So in short, okay, you can say that VIX is actually the implied volatility, okay, of the S&P index, okay, within the 30 days. So the 30 days S&P index options, okay. So in other words, is the expected volatility. So we can say that, whenever there is a market sell-off, there is an anticipation that there's a lot of volatility, okay, then the VIX will spike up. So you can say that, the VIX, okay, VIX, okay, and the S&P 500, okay, has an inverse relationship, which means that when the S&P, okay, have a sell-off, okay, typically the VIX will spike up. So it's an inverse relationship. So you can see from my VIX chart over here, right, there are a few lines over here, okay. So just take note of these numbers over here, okay. The decimal place is not so important now. So you can see that it's a 19, 27, 35, and 43. All right. So 19, it is actually the mean value. So for those who don't know what is mean is actually the average, which means that, okay, for the past 30 plus year or so, okay, VIX, the average value, I will go to the weekly time frame. Okay, the average value of VIX, okay, average value. You can see that, VIX, this is the weekly time frame, panning from 1990, okay, until now. So for VIX, there's up, down, up, down, up, down, up, down, right? So the average value of VIX, okay, it is about 19. Okay, then the number, you can see the 27, it is actually the 1SD, the first standard deviation. Okay, then 35 is the second standard deviation, and 43 is the third standard deviation. So this is so-called normal distribution. So which means that most of the time, okay, about 70%, VIX will fall within 27, okay, about 95% or so, VIX will fall within 35, okay, and about 99%, okay, VIX will fall within 43, okay, this is the value of VIX. So how do you actually get this number? So before I show you how to get this number, right, you'll realize that a lot of time, okay, I'll head back to the daily time frame. A lot of time, okay, VIX number will so-called stop at the first, second, and third standard deviation. You can see over there, okay, like not including yesterday, like I can see that previously in early 2023, VIX spiked at the first standard deviation. Previously also got the first standard deviation, 1SD, okay, and then prior to that, there are a few like 1SD as well, okay, 1SD as well. So you use the eyeball, you can see that also there are times where the VIX spike at the 2SD, 2SD, okay, 2SD and stop at the 2SD. 2SD means that the VIX is about 35, okay, and then about 2SD again, okay, and then there are also time where VIX spike above the 3SD. So I just go back in time over there. Of course, 2020 was a very abnormal period where VIX spiked up greatly to about 80, but this is also above the 3SD. You can see that in 2018, there's also VIX spike up to the 3SD. Okay, and then in 2015, VIX also spike up to the 3SD. Somehow it's just a magnet for the VIX to go to the first SD, second SD, and the third SD. And way back in 2011, okay, and 2010, VIX also spike up to the 3SD as well over there. And if I add in the S&P 500 over there. Okay, I add in the chart as a comparison. So SPY, I will just use the S&P ETF as a comparison. Click under the new pane over here, and then you make it bigger. And you realize that a lot of time when the market spike to the 2SD and the 3SD level. So for example, 2020, the COVID sell-off, when VIX is at above the 3SD level, this mark the bottom of the market, okay? Or when there's a 2SD over there, okay, this also mark the bottom of the market. When there is a 2SD, this mark the bottom, the low, okay? When there is a 2SD over there, also this mark at the bottom. So you get the idea lah. So I won't go deeper into the chart over there, but you can roughly see that whenever there's a VIX spiking to 2SD, that kind, okay, it typically coincide with the low, okay, coincide with the low as well over there. Okay, coincide, this is a 2SD, also coincide with the low. So whenever there's a 3SD, okay, this yesterday, as I mentioned, right, 5th of August, okay, price actually exceeded above the 3SD intraday. So you can see that to about spot index, spot VIX about 63, but towards the closing price, okay, it is somewhere near the 3SD level at about 35, okay. And based on the data, okay, that I have found online, okay, so this is the VIX forward return. Again, I won't tell you where I get this data from because I cannot verify whether this data it is accurate. So let's just assumption that this data is correct. And you can say that this data is ranging from 2007 to 2022. Whenever there's a weekly VIX closes, okay, above 46, that is above the 3SD, the 3 standard deviation, which is pretty rare, not often. You can see that, VIX 2008 can spike up to 79, 60, 2020, 60 plus, 2020, 2008, that kind of, if you are in the market long enough, you realize all these years are the panic, okay, like global financial crisis, COVID sell-off, there's a certain period, okay? But if you can hold, if you buy during all this panic selling, right, if you can hold it, okay, for 1 year, you can see that the average return, it is about 40%, 39.4%. Hold 1 year, there isn't a single losses over there, okay? Second year, third year, it is the same as well. There's a gray shaded area because, from 2020, at that point in time, to the data I found, okay, it is not yet 3 years. So of course, right now, from what we see in hindsight, okay, now it's 2024 already, we can also say that it is also positive since 2020. So in short, okay, if you can hold more than 1 year based on historical data, previous history, it tells us that the average return after the VIX spike above 46, okay, the average return is about 40%, which means that you won't lose money when you buy during the panic selling. Of course, you cannot time when is the exact low, okay, but that's if you can hold for 1 year, okay. I hope you get what I am trying to say here. But again, this doesn't mean that moving forward, okay, it will be going to be like this, exactly the same, okay. Things could change. These are just what has happened in the past, okay. So how this, of course, this tutorial, this masterclass is to share with you how do I get this data over there. I'll just remove this S&P chart over there. Okay, so how do I get the 19, 27, and 37? Okay, all right, these okay, how come the 3 standard deviation is missing? Okay, never mind. Okay, so you go to, you can just search for Yahoo Finance, okay, CBOE VIX. Okay, you can just search for Yahoo Finance VIX. Okay, you come up to the same page. This is the one that you are seeing, the CBOE volatility index. Okay, this is exactly the page over here. All right, so you hit, I can't move my camera over there. Somehow it's a bit laggy, but never mind. So you can see over here, right? Okay, go to the, oops, it's a bit laggy. I don't know what happened. Just give me a while. Okay, anyway, this is the historical data. Okay, under the historical data over there. Okay, you can search from, I think there's too much data over there already. So anyway, search for the max data, and then you click download over here. I think you get the idea, right? So this is the CBOE data. I repeat, under the historical data, at this button, you can click to the max data, okay, and then you click download, okay? Once you have this data, right, you head over to ChatGPT. Okay, ChatGPT, you can actually use the free version, but for myself, I'm using the premium, the paid one. So I'm able to access the ChatGPT 4.0 so-called version. I'm not sure whether the free version you can able to get that, but I think it's roughly the same. So once you download the VIX data, right, okay, you can just upload to the VIX. So it is the one that I have. The VIX data is here. Okay. Anyway, so for the GPT, right, you can actually just chat with GPT lah. Okay, you can tell him that let me know what you know about the data. Okay, for example, like okay. Then they say that this from the data they know that it is from VIX. They have certain date open, high low close, adjusted price. Okay, high low close. So this is they know. So in fact, the AI, the ChatGPT know this is the VIX data already. Okay. So now if you need any specific analysis or visualization of this data, let me know. Okay, you can just prompt AI. Okay, that so, okay, just click. So I want you to calculate the mean of VIX, okay, using the adjusted close price. Then ChatGPT will actually do the calculation for you. So you can see that based on the number very fast, okay, adjusted close is approximately 19.49. So that's the reason why you can see that I got this number 19.49. Okay, so I wanted to calculate the first standard deviation. So just ask him to calculate for you again. Calculate the first standard deviation. So you can see that the first standard deviation of VIX using the adjusted close price is 7.88. So you get the number already. So you can just add. So you can calculate, okay, the first, second, and third standard deviation. Okay. You ask it to, then you add the mean to the standard deviation and give me the final value. Can you see over there? Right, mean plus first standard deviation, 27.37, okay? And then second standard deviation is 35.24, okay? And then the third standard deviation is 43.12. So this is how I got the number 43.12. This is how you got the number, okay? And then you ask GPT to plot the data, okay? Yeah, so you can see that there's also already a so-called a prompt over there, suggestion, plot VIX data with standard deviation. So ask GPT to plot the data for you. How come it's not showing? Okay, show me the chart. I think it's plotting. Not sure why it can't give me the chart right now, but you get the idea, right? So anyway, previously when I do this, right, okay, the chart that it gives me, the plotting that it gives me is actually this, okay? I will just show it with you. This is the ChatGPT that output the plotting. So you can see that, there is the mean the one is the one in red dotted line, first standard deviation, second standard deviation, and the third standard deviation. Okay, so this is how I use data analysis on VIX and using GPT as well. So this is what, already plotted already. It needs some time to actually plot. Yeah, so this is plotted exactly the same lah. So exactly the same, takes some time to plot it out for you because there's a huge data from 1990. So this is the one you saw right now. So I hope this tutorial, this masterclass is useful to use. How to use AI ChatGPT to help you, okay, do some crunching of numbers, okay. Last time it's a bit more difficult. Now it's very, very easy really, okay. So if you find this useful, okay, give me a comment, okay, in the members area. And thanks so much and see you again and bye-bye.